Lululemon just reported they beat on both earnings per share and on revenue. They are up 10.5%, 11% after hours. And guys, S&P and NASDAQ also hit all-time highs today. This is our 24/7 Everything Money channel. We focus on 4 or 5 videos a day where we do earnings reactions. We do economic reactions. We react to other things in the news. We love this. Guys, Mo was just saying, is it sad that I'm still not immune to these 11%? I'm immune to it. I just figure if somebody beats by a penny, up 11%. Guys, they were expected to earn $2.39 per share. They earned $2.54, beating by 15 cents. Okay, that's about 6 or 7%, 8%, yeah, something like that. Beat. 2.21 billion versus 2.2 expected. What's that beat by? 0.5% or something like that? I mean, come on. And the company's up 11%. Guys, don't tell me markets are rational, please. All-time high on Lululemon was $516.39. Just late last year, December 29th, 2023. It got as low recently as $293 just last week, and now it's back up to $343. Talk about volatility, Mo.
So I have a couple of key highlights here.
Let's hear it.
You're going to love this one. Board of Directors authorizes a $1 billion increase in stock repurchase program.
Oh, boy.
Revenue increased 10%.
But wait, Mo.
Okay.
Hang on a second.
Okay.
The price of free cash flow is only 24. Now it's up 10%, so maybe it's 26. It's not the worst we've seen.
No.
It's not the worst we've seen.
It's only 25.
Okay, so not the worst.
Yeah, we've seen worse.
But guys, remember, buybacks are only good if you're buying massively undervalued shares, not expensive ones. Go ahead, Mo.
So revenue increased 10%. America's revenue increased 3%. International net revenue increased 35%.
That's awesome, because international has a lot more growth potential, I would guess, than the U.S. Keep going.
Comparable sales increased 6%.
Oh,
Ooh,
good.
Wait a second. American comparable sales were flat. International increased 25%.
So another retail consumer goods business.
Struggling in the States.
Yeah. I mean, we've seen it with Target. We've seen it with Home Depot.
Lowe's.
We saw it with Lowe's. We're seeing it now with Lulu. The one that's up, Walmart was up 3.8 or 4% same store sales. Guys, same store is important when understanding a retail business. It's stores that have been open 12, 14, 15 months. They describe it in their report. They sit there and say these sales, that way you don't take a new, remember, if you have 10 stores, you open a new store and sales go up 5%, but the number of stores went up 10%. You want to be able to compare what were the stores that have been existing for a while and stabilized. How did they grow? That's the important part in retail here.
So for the second quarter of 2024 going forward, this is the forward outlook, 2.4 to 2.42 billion is the range for revenues. That represents a 9 to 10% growth. That's kind of the estimation we're going for.
9 or 10% growth, huh?
I mean, if you're seeing that type of increase in international, maybe that continues to carry it.
Yeah, but you'd think with a company like Lululemon, they still have a lot more growth potential. I mean, let's go look at their growth here as a company. Let's go check out the financials, the income statement. I love this new version of our software. Mo, have you seen this? No matter where you're at on the history. How about me? Do you hear me now? Yeah. Is it my mic?
Hold on a second. I muted Mo. Do you hear anything?
How about now? You hear me at all? You don't even hear me? Okay.
There was some rumbling.
Okay. Now here's the revenue by year. Mo, I love this, what we just did on our software. We have the trailing 12 months locked in here. So no matter how far in the past you go, you'll still see us trailing 12 months here, which is great. But look at this revenue growth, Mo. In 2015, 1.8. 2 billion, 2.4, 2.7, 3.3, 4, 4.4, 6.3, 8.1, 9.6 billion dollars. And now they're reporting. So what did they announce for the full year? What do they report? Or what are they estimating?
Continues to expect net revenue to be in the range of 10.7 to 10.8 billion.
Okay, so they did 9.6. So 10.7 to 10.8 is about 1.1 to 1.2 billion. On 9.6, it's about 11.5 to 12.5%, roughly.
That's exactly right.
Growth. Okay, great. I mean, that's a more stable business, right? Mm-hmm. And I don't know what growth, but guys, the thing about Lululemon that's great is women love it. It's high quality stuff. But I will say this, Mo. Lisa, my wife, who, listen, we have the means. She goes, I'd rather buy from Athleta. She's like, it's less money. And it's just like, I just have a hard time buying $130 for a pair of, that's what she says.
Nicole has 64 pairs of black leggings.
From
64
Lulu.
From Lulu. 64.
Yeah. Lisa goes to Athleta and she's like, listen, I like Athleta. I think it's great stuff. It's a lot less expensive. Show me the receipt. I'm like, wow, this is impressive. So who knows? Lululemon has definitely the higher quality brand image. That's for sure.
Yeah, good stuff. I like their pants.
Yeah. A lot of guys like their pants. Excellent. So let's go check out their 8 pillars here. Let's look at, now they're up 13%, Mo.
Of course they are.
But look at this. Great balance sheet, by the way, Mo. $39 billion market cap, $39.6 billion enterprise value. Folks, that difference of $600 million is their essential debt, and they can easily afford to cover that because their cash flow last year was $1.65 billion. Their average over the last 5 years is $785. Gross margin, 58%, because they manufacture their own stuff.
Yep.
So boom. And of course, a 5-year PE and 5-year price of free cash flow. Guys, I think this is skewed because they obviously grew their net income and profit and cash flow a lot in the last 5 years. Because you look at their 5-year average, free cash flow 785, 1 year is 1.6. So obviously they grew a lot recently. So again, buying back some shares, okay, sounds good. Why are you doing that? Doesn't seem like a screaming deal. It could be. Look at this return on invested capital, Mo.
It's
25%.
It's really big.
Huge.
And the trailing 12 month is 29.63%.
Yeah, that's
So
incredible.
Increasing.
So what do analysts think?
Oh yeah, big time.
Oh my gosh. Look at this, guys. Analysts, $12.71 earnings per share,
Holy.
going to $25 in the next 5 years.
Wow.
Let's look at that's double-digit growth every year. Revenue growth, basically double-digit every year, 9.8 billion to 16.3. All right, so I look at this and think to myself, okay, you have a company that has a high-quality brand. I mean, that's the thing, guys. Lulu is synonymous with quality, right? Like people don't look at it and say, oh, it's a crap product.
Nope.
It's a very high-quality perceived product. Women are willing to pay a lot. Every time I go to a Lulu store, it is busy. Every single time.
It was the first store that I was okay paying like over $100 for a pair of pants.
Really?
And it's worth it. It's worth it. Good quality.
Yeah.
I mean, I've had these pants for 5 years now. I still wash them all the time and they're good.
All right. So this is a great quality company. You have Mo testifying to that.
Yeah.
Testify, Mo. Testify. I mean, you have 516 all-time high. It fell to 293. And guys, look at this fall. December 29th to February 28th. That is 5 months. It fell from 516 to 293. That's 40%. That's over 40% drop.
Dang.
Yeah. These things do happen, even with high-quality companies like Lulu.
That everybody loves.
That's growing its revenue and profit by a big amount, has a high return on invested capital, has very little debt. Do you see my point here? So if this is starting to click with you and you're new to the channel, do me a favor, subscribe. We do these things. We talk about these things. We're going to teach you more and more as time goes on. We're not here to tell you what's the right thing to buy. We're here to teach a process that you can apply yourself. I'm not giving you fish. We are teaching you how to fish. And if you're the kind of person who wants to do things on your own, we're the channel for you. So make sure you subscribe. All right. So, Mo, anything else in the annual report that we need to take, or the quarterly report we need to take a look at?
Not that I've seen. Nope.
Anything on gross margin? Because it's 58.3% here. And if they manufacture their own clothing, which to get that kind of margin, you basically have to, is any movement in the gross margin?
Gross margin increased 20 basis points.
Okay, so that's not a big number, right? 20 basis points takes it from 58.3 to 58.5. And I'm sure, I'm just saying if that was the case in this situation. But look at this, guys. The bottom line profit margin of 14 to 16 with not a lot of debt, it tells me they spent a lot of money on advertising. It's got to be, right? I mean, it has to be a lot of money on advertising. But I really give them credit for having that low enterprise value. So let's pull up the last time I did Lulu. What do we got here? I did a 10-year analysis. Okay. Mo, I did 5, 8, and 11% revenue growth for 10 years. Remember, the analysts were only going out 5, and it was double-digit growth, 10% a year basically for 5 years. So I did 5, 8, and 11. How does that sound?
I did 5, 8, and 11.
Okay. 12, 14, and 16% profit margin. I could argue going higher.
I did 13, 15, 17.
I could argue that one because I look at it going, the gross margin's high. As they increase sales, especially same-store sales, that profit margin and that free cash flow margin should go along with it. Now, interestingly enough, their 5 and 10-year free cash flow are both about 12%. I still stuck with my 12, 14, and 16, saying they'd probably even out at some point.
I did the same for my numbers.
13, 15, and 17. Now, PE. I did 15, 18, and 21 for both PE and price of free cash flow. What'd you do, Mo?
I did 15, 17, and 19.
Okay, it's
don't know
not
if
far
I-
from me.
Not far. I wonder, should I increase it because it is like that premium brand? But at the same point, there's so many brands,
That's true.
you know?
I don't think it's a 15 PE.
I don't
think it's a 25 or 30.
Yeah, I was struggling. I would have gone 17,
But they do have good
20,
growth.
23. They do.
They do have good growth and a good return on invested
Okay,
capital.
I'll go 17, 20, 23.
Okay. Now, 9% desired return. Again, no margin of safety here because the market does 9 or 10% over long periods of time. So if that's what you want, just buy a low-cost ETF. But if you want to buy an individual stock, you need this margin of safety because valuation is an art. We don't know the future, and we're humans. We're going to make mistakes. So I'm at the Analyze button. And by the way, guys, if you want access to the software, in the description below, there's a link. Go check it out. It'll tell you all about the software if you're interested in looking at it. Hit the Analyze button. Boom. I got a low price of 160, high price of 426, a low price of 266. It's on my watch list at 200. So guys, thank you very much for your time. We'll see you in the next video.